Good to have you back. So what do you
Thank
make
you,
of
Scott.
this, right? We're waiting and waiting and waiting, with all due respect to the president, of course. We're going to keep asking, like, when are the deals happening? Those questions aren't going to go away. We'd like to have some answers sooner rather than later, particularly when it comes to China, no?
Absolutely. It would be nice to know, but I think the market's starting to get the idea here that there's going to be a lot of noise coming out of Washington. Today's message is likely to be different from what we're going to hear tomorrow and the day after. And I think the market's going to focus on the fundamentals. And the question is the economy resilient enough to handle this kind of uncertainty? My bet is it is. I think that the consumer is going to continue to spend, and I think capital spending in some areas will weaken, but in the areas of technology and onshoring, I think will be very strong.
So you think we're going to get through this? Doesn't sound like you think we're going to have much more of a slowdown, and certainly not a recession?
Yeah, look, I may or may not have properly reacted to this tremendous rebound we've had in the market. I think I was on your show on April 9th, and we were all kind of looking at this market just kind of going straight up. I was concerned about a negative wealth effect on consumers. I'm not worried about that anymore. I think we've recovered enough of what was lost that we're not going to have a negative wealth effect on the consumer. And I think the consumers are still doing quite well. So, yes, I do think that all in all, the economy is going to be resilient. It doesn't mean it's not going to slow. It doesn't mean we're not going to have a short period of stagflation. I do think that, for example, inflation rates are going to be rising here. But I think the Fed's going to do nothing. And I think in that environment, the reason they'll do nothing is because the economy is going to chug along with some more inflation. And then I think by the end of the year, things will ease off. Look, I think China and the United States have to get this behind them. In the New York Post, there's an article today about some riots going on in China. Here in the United States, the midterm elections is something that the Republicans have to start being concerned about. So I don't think we can go kind of day by day on this. I think we have to look at what is the interests of both sides. And the interests of both sides, I think, are going to be to get this on the way to being resolved by the summer.
It's interesting. The economy, obviously resilient. You point to the wealth effect as it relates to the stock market, of course, and the comeback that we've had from the S&P, up 16.5% from the April 7th lows. Now, the other side of the wealth effect is knowing that you have a job. And so far, the labor market has remained equally resilient. But there is a question, though, going forward, the longer this plays out, as to whether it will, right?
Absolutely. The labor market is the key. I was a little bit disturbed to see initial unemployment claims jump up by about 20,000 last week. But a lot of that was New York State. So I think there was something funky in the data. But I'll be watching the initial claims week by week. But look, I think employers over the past few years found it pretty hard to get workers, especially skilled workers. They're not just going to willy-nilly start to reduce their so I think they're going to hold on to them. And I think they're going to look beyond all of this noise and conclude that, once we get past this, the outlook for the economy, for earnings is really quite good. But to participate in that, you've got to increase your productivity. And so I'm still happy to the idea that productivity will continue to make a comeback.